Well, hello, folks. I'm LA Little, and this is your daily NeoTA wrap. We take a look at these markets, and we do it from a neoclassical perspective each time, asking ourselves what happened today and what does it tell us about the coming ones. I do this show 4 times a week, every Monday through Thursday, live at 9 o'clock Eastern Time and archived on YouTube. You can catch me there on the channel LA Little. As always, I ask that you participate in the show. You can do that by texting at this number, 303-912-9110. Again, 303-912-9110. You can also email me, support@tatoday.com. I can pick it up from there. Or if you have a live stream, you're logged in, just type it in to the live stream chat window. As far as what we thought yesterday and what happened today, well, another day of up. We got the industrials up another 30%. The SPX breaks out, goes to all-time highs, closes at all-time highs, another 5.5, almost 6 points higher. Dow was up 60. Composite yesterday and the NDX both gave off 2-bar reversals. It usually says you're going to get sideways to down. In a strong market, it doesn't want to go down, and the best we got was sideways, a slightly higher. Russell a little bit better, but also kind of lagging. With gold down big again, percent down. Silver not as bad, but silver's actually underneath the weekly bar. We'll take a look at those two a little bit later. Dollar consolidating. We actually had green pretty much across the board elsewhere. With bonds reversing higher and so forth. What do you say to a market that won't stop? Well, just let her rip, I guess, because that's what she's doing. Let's pop in here, get our charts up, take a look at what we got, and try to decide what it means and what it means for the coming day. We got tomorrow Jackson Hole, speeches by Yellen and also by Draghi. Those are going to be the two highlights tomorrow. I assume those are both in the morning. I'll have to go check the schedule, see when they're coming out. But that's going to be the focus tomorrow. Today, the focus was elsewhere, on economic numbers. We had economic numbers around the world on PMIs, and they were generally disappointing in most cases, other than Germany and the U.S. The U.S. economic numbers actually surprised quite a bit to the upside across the board. There was the PMI that was at 58 versus the 55, almost 56 consensus. The existing home sales were a little bit higher than expected. The Philly Fed was 28 versus roughly a 20 consensus. The LEI was 0.9, only 0.6 was expected. Pretty much across the board, stronger numbers. You would think stronger numbers may worry some about interest rates, but then again, this Fed keeps telling us they're going to keep them at 0, and they're going to keep them there for quote-unquote an extended period of time, and I think that they do mean it. As a matter of fact, I wrote an article recently you can read if you so care to why the Fed may do more QE. It looks to me like we're setting ourselves up for QE forever. And the reason for that is I don't see how we get our rates up high enough to fight off a next recession. And if you look at where we are in terms of this particular economic expansion, here's the recessions, here's the rates. You can see we're down here stuck at 0. If we look at where we are right now, well, we're up there over the average post-war duration of an economic cycle. Now there have been some long ones, and so maybe this one's going to extend on up there 100 months or so, but at this point we're over the average, so just one more measure telling us that we're extended. So going back here, let's pop into the markets and let's look at the S&P to start with. So swing point higher, we break over it, we have less volume, it's going to be a suspect breakout. Again, last night I talked about extended angles. This angle of ascent hasn't changed. It's still extremely parabolic. Usually that will retest and regenerate right away. But now you kind of have a different story going on, and if you look at the numbers here, you're at 1994, almost 95 at the high, close at 1992. What is that thing going to do? Well, now it seems like it's going to try to spike the 2000, doesn't it? I mean, you get that close, you've made this kind of a run. Do you really think they're going to back off here? It's kind of hard to consider that as a possibility, quite frankly. So we may see this thing spike one more day. You've also got the earnings, not the earnings, but the holiday, Labor Day holiday coming up in a week. So we may not see much of a pullback, you know, because we've seen run-ups into every holiday and strength on those days, and you know, another one's just around the corner. So you know, it's parabolic, but there's nothing here to tell us it's going to stop yet. If you look at the Dow's doing exactly the same thing. Dow's up there stretching towards the highs, wants to get to the highs. And if you look at the other week when the Russell actually tested down into this big bar, right? That was the scare bar from about a week ago. Top of that was 1151, had some pretty decent volume on it. You test into it today, right? And then it doesn't have the volume today compared to there, right? Flips it around, heads right back up. This thing's going to test right back in here and try to get over that high that it failed on last time. So the Russell, the Dow, the S&P, all of those look as if they want to trade higher. Now, our measure yesterday of a reversal was a 2-bar reversal on both the NASDAQ and the NDX. Well, the NASDAQ does another one today. So that's 2 2-bar reversals in a row. The NDX actually holds a little bit higher, so you don't get the reversal again today. But as this thing has parabolically moved, you're getting some sort of tired look to it up here at the top. If anything, we have some mixed signals with respect to these indexes going into tomorrow. If we look overseas, you know, we actually have strength in most of these markets, but they too are starting to look a little tired to me. I'm going to just flip through a few. Here's Brazil doing a doji at the top. Here's the Australian market that reversed hard last night but left some decent volume, so it does look to retrace next, you know, now, but probably heads right back up there again. If you look over at the 8 shares in China, they came off, volume expands a little bit as it comes back into the high of this low. That looks like that's going to try to test lower again. Hong Kong also trying to pull back finally, going to come into this big bar. That's going to be a retest, regenerate. It's coming back within 6 bars. So you could see it get to the bottom, which is the support zone. And you know, you just go down the list. The only one that's really just going against the tide right now is the Nikkei, and that's because we just heard today that they're going to do potentially another $1 trillion stimulus. Talk about all in. How about all in doubled or tripled? This one's going to try to run to the top again. You know, it's insane. What they're doing around the world in these central banks is insane, but it just keeps coming. And talk about insanity. The next insanity move is probably going to come over here in the euro and in the European markets. We popped up. This is the DAX. We popped up into resistance. This is the major resistance zone for this on the way back up. You know, if it gets over this, then you go back in and do a retest, regen off that breakdown bar into that swing point low. This may just simply crawl straight up there because if you look at the CACs, that is what the CAC's doing, and all of this is happening despite the sanctions that have been put in place, the fact that there's no growth in Europe, all of those kinds of things. It doesn't seem to stop it. So you came into the key area here today. If there was going to be a reversal immediately, it was probably going to be here. It didn't happen. So now it's doing a retest, regen into this bar. It is after 6 bars, so usually it just tests the low end of that. It's into it pretty deep. We'll see if it can get back up here and test this top of it. If it does, I would be almost you know, I would feel fairly certain that we're going to reverse up here at least for a while. So tomorrow will be a key test. And again, Draghi speaks tomorrow, so does Yellen. So I would think that they're going to have a major influence on what happens in these markets. Now, again, I don't know what the speech time is. I'm pretty sure Yellen is before Draghi. If that's true, we won't see an effect tomorrow on these markets because they will have closed already. So foreign markets, kind of mixed as well. Some of them's trying to, you know, the weaker ones are trying to push higher, the stronger ones are trying to pull back. Almost like there's just rotation, right? Like you sometimes see, or many times you see in these bull markets. Speaking of rotation, let's go over to the sectors, because in the sectors, you're starting to see rotation there. And so if I look at these sectors, now these are a little bit more negative tonight than they were last night. And I'm going to pop through these and show you this so I can summarize. Over, under, that's a 2-bar reversal after an extended move. The SOX, it is higher again tonight. Nothing there to tell us it's going to pull back. So that one's still heading higher. The XLB, 2-bar reversal. Over the highs, back in, going to do a retest, regen immediately. XLE, this one actually moves higher, coming into this swing point high, 97.70, got up to 97.76, closes at 97.66. That's a failed test of the highs, lighter volume. That one should reverse and try to come back. Then you have some strong ones. XLF. XLF actually gets over the highs, right, and just continues on and plows through them both on this time frame and on the weekly. So that's a bullish breakout with volume here over multiple time frames. That probably goes even higher. XLI goes up, is testing in the resistance area, gets over, back under, 2-bar reversal. XLK makes new highs. So you got a breakout there, although it's suspect it is a breakout. XLP, that one actually looks like it's failed on a test of the swing point high and fails on volume and price. Should retrace. And so as you can see, there's a lot of these that want to retrace. Here's another one, not the SOX. The SOX actually is going higher. XLV is coming back, does a 2-bar reversal tonight. So I count 1, 2, 3, 4, 5 2-bar reversals out of 10. Folks, that seems to throw the weight to the side that you really don't want to be buying up here, and more than likely we're going to see some sort of a pullback. And that's despite some of the strength that you still see out there. SPX going to be hard to get a pullback there, right? Because you got the financials powering that thing higher right now. And so from that perspective, I doubt that one's going to give you any kind of a pullback at this point. But elsewhere, 5 of them were trying to. And so I suspect, you know, in summary, tomorrow, if anything, you know, if we don't get some sort of a pullback, we're going to struggle to go higher. We may get that early pop on whatever news comes out of Jackson Hole, and then it pulls back and finishes kind of flat. But it looks to me like it's going to have a difficult time stretching up and continuing up at this point. Okay, so that's the summary. Let's pop in and take some of your questions. You can type them in. I have some that were emailed and texted to me. So let me tackle those first, and I'll take them in order. So the first one has to do with J.C. Penney. So let me pop over and let's look at these together. There's I didn't go through the ox markets. Let me do these first, otherwise I will forget. I want to go and look at the gold and the silver and so forth. So if I look at a couple, 3 things here, emerging markets, they're hanging at the top, right? They can't go any higher. If you look down, you know the dollar's been strong. Look at the currencies against the dollar. The Aussie, right? The British pound, the Canadian dollar. They're all sitting at their lows. The euro, right? The Swiss dollar. I mean, just go down the list. The Japanese yen. These currencies are all being demolished with respect to the dollar. So it's like the U.S. market, now that it's stronger, right? The dollar's picking up strength against all the others, because if you're going to tighten somewhere, where's it going to be? Well, it's going to be here. Now, the one that really threw me, and I'm not quite sure why, is this British pound, because that one, they look like they're going to tighten as well. But this just continues to sell off, so I guess I'm not sure I understand why. Let's go to gold. Gold takes a big trip down, breaks down, gaps over this swing, this high volume bar. Now, I usually don't, try to make excuses or anything, but it is a gap up, so the bar really looks like this. So it's really coming into that area, right? And you can see that more clearly if you pop over and look at it on the weekly, because the weekly bar, that low is 121.82. That was the first bar that showed us some real strength, right, on this second wave up. You had it back here, you fade all the way back in, now you have it again, and you're fading back in again. You can see the volumes on the weekly are light coming into that bar. Tomorrow, if it gets down in here, this is going to be a key test for gold, because if gold can't hold here, it's definitely going to come into the high of the low, which is going to put it dangerously close to breaking swing point lows, which may bring it all the way to the bottom again. And so, it's kind of a key area here for gold to hold this price point. And so that will be a key test tomorrow. I expect it's probably going to happen tomorrow, and we'll see what it does. Volume did pick up a little bit today, but again, we're not talking about much volume on the way down. Now, if I flip over and look at the silver market, silver actually is way under those lows, right? Got underneath the prior low here 2 days back, closes over it. Silver is doing its best to try to find a bottom, but folks, that's an ugly downtrend in the silver market, and I think it's really going to come down to what happens with gold probably tomorrow. If I look over at some of the stocks now, the stocks are finally starting to come in. So I'm looking at the GDX in general. You can see the volume starting to come out of these, right? They're starting to press lower. They're going to press back into this big bar up, which was June 19th. That's where it's going to try to go. And at this point, you have a dangerous situation set up, because you have swing point lows all clustered together down here, that if they start to break, right, you can get a faster move down. And we know this market likes to move fast once it gets going. So GDX starting to show some wear and tear. GDXJ doing the same thing. You got a bunch of swing point lows. So you have this big consolidation range, and now you have a lot of swing point lows and highs lined up on both sides. That's why it becomes critical that it holds. If it doesn't, you blow these out, you're going to get a fast move down, right? And it probably sets up a decent buy, but it's going to be hard to buy it, right? Because these things can extend, and they can. If you look at some of the individual stocks, and I'll stop after this, but I'm seeing some volume come out of these now. Here's Royal Gold. FNV is another one that's in the same space. Volume coming out of it twice now. If you go to some of the others like GG, volume starting to pick up today. AEM, another one, volume picking up as it comes in. What's another one? Newmont. Newmont's another one that got hit pretty hard volume-wise. It actually didn't do too bad today. It's coming back into a retest region off that high. I was trying to think of, gold, GOLD, which is Randgold out of South Africa, because the currency's working against this one. This one's going to try to make it all the way into this low now, 79.88. So you're starting to see some of these big names in the gold market cave over. Gold's going to have a big day tomorrow, one way or the other. Bond market doesn't want to give it up. We've already looked at the dollar and saw strength there, and it's still holding. Okay, let me pop over and take some of these questions, and any questions the others may send or type in. So JCPenney was the stock to look at, and the question, let me go back and see what the question was. So JCPenney, so the question is, let's see what we got here. Can I look at it on the show, and daily and weekly as broken swing point highs? I'm nervous of buying anything now, however, because of the recent sharp rise in the overall market. So here's JCPenney on a weekly, and so no, I would not be buying this here. And the reason for that is you've got this high, you got some decent volume on it, you went into it here, which happens to be also here in that little zone you see of resistance. So you go into it, right? You test into it. Yeah, you got decent volume, which means you're probably going to try it again, but you can't get over it, right? And unless this thing has a big rally tomorrow, it's not going to stay over it. So from that perspective, this thing's going to fail. It's going to pull back again, and it can pull back all the way to the bottom of this, which is 816. So it's quite a ways down. So I wouldn't be buying it here. If I look at it over on the daily, of course it looks better, and I'm guessing that the earnings just came out because I know all the retailers are doing their thing this week. And so I'm guessing earnings is what pushed this thing up. But you had a little reversal at the highs tonight, right? So if you look at this, right, you go over, back under, right? You got lighter volume. That thing's going to try to pull back. So you got a support zone here and another one there. I would be looking at the lower one as the ideal one, but you'll just have to see how it trades back and if it holds here and how the general market holds up. I suspect, given the way this thing moves, you might get a deeper pullback into this retest region. So that would be that would kind of be the area I would be looking for, this swing point high. That's JCPenney, and then the next question has to do with just a general question on ABCD patterns. And somebody else asked me this too, so maybe this is a great time to talk about it. So the question has to do with the ABCD pattern, and this gentleman is looking at the GSPC, or the S&P 500, and asking, okay, is this an ABCD structure on the way up? And I'm not sure where he got his numbers. I actually wrote him back when I saw the email to try to understand what he was looking at. And he was talking about a breakout of this. Would it confirm an ABCD formation with a target near 2080? Now, if we look at the weekly, right, you might get it from the weekly. You certainly don't get it from the daily, or at least I don't. You know, the only ABCD pattern that's in effect here was this one, right, where it came up to there, back down, and we talked about it when it was forming, and it had its extension to like 1968 or 9, I believe it was, right? That was the ABCD pattern. So as you see, this thing is going way past that pattern. And at this point, right, if you have a pattern, the pattern is from this low now to wherever it goes, and then the pullback. And so at this point, I don't really have a B point yet, much less a C. And so at this point, we can't really see an ABCD pattern on the daily. If I go over to the weekly, what I'm looking for is a reversal somewhere in here, and I don't see one. So the weekly actually goes from here to there, back down to here, and today you just went over it. So on a weekly, you just created an ABCD pattern on the way up, right? That will take it probably past 2080. Let's see what the numbers are. So this is 1814, and it's about $1.70. Onto this one is 2078. So maybe that's what you're looking at. I don't look at it on the daily to get that. I switch over to the weekly to find it, and that's probably what you're seeing on a longer term daily. Remember, my charts are 60 bars. The reason for 60 bars is you can get that same information you just got on the daily off your weekly if you go over and take a look at it. And I like to look at it on the weekly, not the daily, because if you had, and I'll pull up and show you what I'm talking about, if I pull up the S&P here and bring this back to say a year, which is what most people do, and you look at this, there's far too much information here to you know, it's just too cluttered. I can't tell what's happening. So I'm guessing what you've done is you've come here and you've said, oh, here's the ABCD, right? Going from here to there, back down and back up, right? Well, yeah, but there's a lot of ABCDs in here in the way I look at the market. And you flip to the weekly, you know, it's just a lot cleaner. It's a lot easier to see, and a lot less clutter. And that's why I use 60 bars. One reason, the other big reason, of course, is I want the algorithms to apply to all time frames. And so what you have to do is standardize those time frames. So that's the ABCD pattern in the question there. Let's look at the next question. This one has to do with CSQ. So let's look at this. CSQ is total return fund, and so the lead up to this question is it's just below a swing point high 1216 on both the daily and the weekly. There's an ABCD on the weekly projecting to 1281. Okay, which is another 70 points up, which is a pretty big number here, which would be a 6% above today's close. However, there is no ABCD on the daily because there has been no pullback, and that's true. There is none, and you've also done. And this is an income fund, folks. This is like bond fund, and you've done. That looks like about 6% or so. So you've done almost 6% in 2 weeks on something that shouldn't move very much. That's a lot. And so would I be buying this here? I probably wouldn't. I would make it pull back. And then the latter part of the question here is if he buys it, he would want to sell it ex-dividend because it often declines more than the dividend itself. And that's September 8th, which is about 2 weeks. My opinion on this one is let it come back in, because there's two things here that makes me think it probably will. A, you've got this high volume here on the high. It may go up and test that high, but I suspect it's going to have a hard time getting over it. And so you have almost no gain here for the risk you're taking. If it starts to pull back immediately, right, and it looks like it did close over these tonight. That top was 1207 and you closed at 1208, so you did. If it does start to pull back, right, it can easily pull back to these lows, which would be 1197, 1193, which gets you into the support zone and also gets you into these two high volume bars. I would try to buy it around 1197, 1195, somewhere in there. I think that then gives you two things in your advantage. One, you're going to have probably an ABCD structure if it does that, which probably takes you to that number you're interested in. And then two, the reward to risk here just isn't there. And I know it's hard to lay off this market if you don't have much in the way of stock on right now. I mean, if you don't have much of an inventory and you're seeing this thing go up day after day after day, it just beckons you to do something, right? I've got to get in, right? And yeah, you know, it could work. It could go up 2 or 3 more days, but you know, just think about it. If it goes up 2 more days, and you know, we're already past the big 1% day moves. Now we're into the 0.2% or 0.4% moves. Yeah, it could have one more big spurt up, but you know, they're getting smaller. So let's say you get lucky and this thing goes up 11 days straight instead of just the 10 it's already done, or 12 days straight. Are you going to get out on the 12th day? No, you're probably going to stay in. And if it does, it's going to come back at you, and then you're going to lose everything that you got, and you're probably going to be scared to buy any more if it comes down deeper. So it's best to just wait, right? And what you have, pull your stops up, protect your profits on your trading vehicles, and on your core stuff, just forget it, let it go up. You know, I mean, you can trade around them a little bit if you want to, but you know, don't sell them out. And don't put tight stops on them. I mean, those you try to project something and sell out on the projection. Not sell out, but take profits, partial profits on your projections. Okay, I hope that helps. Let's see, I got another one over here. Oh, you were looking at the weekly. So Dave comes on and tells me he was looking at the weekly. Perfect. I'm glad you are. That's what I would hope you were doing, Dave. Thanks a lot. So that's the way this thing looks in terms of the questions you had. Going back to the markets one last time here as I run out of time. You know, folks, these markets will pull back at some point. I know they feel like they never will. This angle of ascent is impossible to maintain. It will flatten out, flatten out completely or retrace. Retrace is the more likely case, right? Could get another day pop or so, but it is going to retrace, and you want to buy the retrace. So just be patient, wait on it. When it does, do it. There are places you can buy, but it's not here. You have to go find them. And if you're with me, I'll tell you where those places are. You can sign up. You know, let me do a little promo here. You can get started right there, folks. Just hit the button. It's pretty easy. Hit the button, come over, see what the tools are, what we can do. And I'd be more than happy to help you help yourself be financially independent. Have yourself a great night. Take care. And I'll see you Sunday, unless you're a member. Of course, I'll see you before then. Have a great one. Take care, folks. Good night.